Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Chris Englebert, founding partner and CIO of Englebert Advisors, to discuss how retail investors can deal with investing anxiety with the election just days away, what RIAs should be doing to manage expectations, and of course, a chart review of major markets. And Chris, it's great to have you. As always, you have been on with me every month since August 2017 when we first filmed on the PHLX trading floor. And I never thought then, or even in this January, we would be where we are right now.
Yeah, Jill, it's been a crazy ride this year. People right now seem to forget recent history, and recent history was back to 2016, and obviously that was the last presidential election. But this one, with the COVID, with the economy, with the presidential election all packed into 1 year, we're getting, people have election anxiety. It's literally off the charts. I've been doing this a long time, and I can see why people are upset and anxious about what's going on, because when you put all these factors together, you're now at a level, anxiety level that, the average person obviously doesn't know how to deal with. And so, we're going into the markets here, literally days before the election, and we've had a sell-off in the market. And we keep saying to people with a mantra, you've got to focus on your asset allocation. You and I did this a couple of months ago, and that was my theme about making a radical asset allocation change. I mean, again, if you go back and look in 2016, the Nasdaq was down 9 days in a row before the election, and then obviously we had a recovery. So, we've been big on having clients have what I call sleep at night cash. I'm not going to fight with clients that want to keep, an extra level of cash, because that's what you really need to do. Now, interestingly enough, we deal with a lot of money managers, and I had a note sent to me last week by a money manager that specializes in money market funds. It's not, crazy or anything like that, but he showed there is $15.5 trillion sitting in money market funds, checking accounts, and savings accounts at literally 0%. So everybody's waiting till after the election.
It's really interesting you brought that up, and thanks for sharing that, because when we started to see this little sell-off that we're going through right now, it wasn't just stocks down. People were selling gold as well and moving to cash. So it's really interesting that you brought that up. So the next question is, what should RIAs be doing for their clients? 2020, as you mentioned, has been an incredibly challenging year in many ways, and managing client expectations and fear was one of them. I would imagine your phone is quite busy these days.
Yeah, the same thing's kind of happening, and what we're really focusing on is to keep clients from self-sabotaging themselves. Now, we had a situation in March, and again, March was unlike what we're going through right now, but March was extremely scary, February and March. And, we tend to have our clients tend to be very well trained and, educated, and we talk to them all the time. But we did have, one or two clients call up in a panic and say, sell me out. We've spent the last month telling clients, you got to get ready for the election. You got to get ready for the news flow that comes around with the election. And you got to remember, your 401k or your IRA, this is invested for the long term. This isn't, we're not swinging in and out this week or, back in next month. This is your retirement plan. And you may have another, depending upon how old you are, you may have another 4 or 5 or 6 elections to go through. So why are you making a radical change based upon one particular election? The other thing I really think a lot of advisors need to do is have clients start focusing on 2021. I mean, here we are at the end of October. We got 2 months left in 2020, maybe, thank God. But 2021, we believe there's a lot of important themes that are going to play out. The economic recovery theme, there's going to be some type of vaccine. I mean, people tend to focus on a short period of time, but when they step back and say, what's 2021 going to look like? We think it's going to be a, continued economic recovery at some level, maybe faster, maybe slower.
All right, let's take a look at the charts. We'll kick it off with the S&P 500. And of course, as we speak, the week of October 26th, certainly seeing volatility in all the markets we're going to cover.
Yeah, one of the theses or themes that have been going around is that how well the markets do in August, September, and October can give you an idea who's going to be the president, whether the incumbent is going to, win or, get taken out of office. And it was very interesting because here in the last 2 days, with the most recent pullback, we are now negative from where we were on August 1st. We took out the September lows. But again, there's a lot of action in the big cap stocks. The big cap stocks are the most liquid stocks out there. This week we've had earnings by a lot of them, a lot of the well-known names. They've done extremely well. It is not unusual for people to take profits. And we think that's what's happening in the S&P 500. And we're going to roll into the Nasdaq, and that's similar too.
Yeah, Nasdaq 100, of course. I mean, we had a huge week of earnings. And I think part of what the concern is, companies aren't able to give guidance because of lack of policy visibility, not understanding how COVID-19 could potentially impact us over the winter. And of course, Apple was one of those companies, UPS, another one as well. And I think that's part of the concern as well. The quarter might have been good, but there's just not much visibility into the next one.
Right, it's visibility, but if you look at the numbers are astounding. And so people are saying, wow, if they're that good, and maybe we go back to more of a normal economy, are they really going to be that good next year? And that's something. And one of the themes that we've been telling clients, and it's been very difficult this year because there's been this huge bifurcation between dividend stocks, value investors, and growth stocks. One of the things that we've been telling clients this year is that on the large cap growth arena, you've literally pulled 5 years of earnings into about 5 months. And interestingly enough, in the sell-off the last couple of days, value stocks are holding in because people are saying that may be the trade for 2021.
Well, let's take a look at the Russell 2000, because participation from that group has been lagging, not just through the COVID-19, but for quite some time.
Yeah, you and I touched on this theme back in the spring, how, the big companies were able to pivot, get people working from home and do all the things that they needed to do. And a lot of the small companies had to get shut down or they couldn't pivot fast enough. So, you've got the Russell 2000, hasn't taken out its all-time highs, but like everything else, if you believe eventually there's going to be an economic recovery, I can make the case that 2021 could finally be the year for the Russell, because many, and again, I talked to numerous money managers, throughout the week, and I had a money manager tell me that they're a large cap value shop and they're actually changing their strategy because they're seeing so many quote values in the small mid cap space that they want to take advantage of them. So, the two themes for 2021 in economic recovery could be value and small mid cap.
All right, let's take a look at the 10-year Treasury. Quite the move this month. We don't often say that.
Yeah, I know. I mean, it was one of those things where, rates collapsed early in the year. We got down to, 50 basis points on the 10-year Treasury. And I hate to say this, but boom, 50 basis points, from 50 basis points to 75 or 80 basis points is a huge move. And one of the other themes for 2021, we think, is the danger of fixed income. Because if you're at a 10-year Treasury at a 0.7% coupon, and there's a 20 basis points rise in interest rates, you literally wipe out the return of that coupon for a 12-month period of time. And you've got a lot of big defined benefit pension plans that are really struggling on what to do in the fixed income space. I have to be candid with you. I am much more bearish on the fixed income area than I am on the U.S. equity market, because I can make a case that you get an economic recovery that starts to fire up in 2021, and you could see fixed income rates jump, from obviously very low levels to 1.6, 2.5% on the 10-year Treasury, and that could cause large negative losses. In fact, this week alone, there's been numerous articles on how the ag index, that's very common, how it's changed tremendously over the last 10 years and has a much heavier Treasury weighting. And so all the good news in fixed income this year, with the rates coming down and bond portfolios go up, could easily be reversed in 2021.
All right, Chris, let's wrap it up with crude oil. I mean, the complex is just getting crushed. It was grappling with an oversupply situation prior to COVID-19. And with things starting again and then put back on hold, certainly business travel's been wiped out. And that's going to take, I believe, multiple quarters to recover. And now that we know how to operate virtually, will it ever get back to, more profitable levels, if you will?
Yeah, that's a great question, Jill. And it's something that we've been struggling with too. I mean, were prices too high at $65, $70 a barrel at the beginning of 2020? Obviously they were. Then the global economic shutdown, the prices probably got too low. They looked like they were finding a medium around the 38 to 42 level, but now we're seeing some pullback with supply as well. This could end up being the story for 2021, where nothing really happens in the crude oil complex. Obviously internationally, the Saudis want to see higher prices. The U.S. is a big producer of oil right now. we see a real, tug of war going on. And I think the story for 2021 is going to be not a lot of change in oil prices, no big up, no big down, because like you said, there's a lot of supply, but demand is, obviously curled down. And the question is it ever going to come back? It could be more of a 2022 story before we really see that balance again.
Yeah, I mean, think about it, even from one person's perspective with business travel, you know how it is January to March. That's like almost back to school season for all the conferences that we have in financial industry space. I mean, any one of us could be on the road 15, 20 times just in the first quarter, right? So
Right.
that's one person, multiply that by, millions of people who travel for their jobs in this particular industry. So I agree with you. I think.
I just wonder if we're not getting to the point, though, the pendulum has swung so far. I don't know about you, but I'm beginning to get Zoom fatigue. I could literally be on 3 to 5. And now, one of the things I really like is that a lot of the money managers and strategists that we talk to, it's very efficient to do a 20 or 30-minute Zoom call because I feel like I get a lot more, of the points that they're trying to make. But yesterday, between 11 o'clock and 1 o'clock, there were 4 Zoom calls on politics and the economy that I could have been on. And so I'm just wondering, again, we went from everybody traveling now to everybody doing Zoom calls. I'd like to find a happy medium somewhere in there.
Right. And Chris, let's throw in one more thing. I could keep you all day long, but this will be my last one for you. Let's look at even capital raise, right? The IPO market. People thought it would be really challenging because we're not able to travel and they can't do their road shows. Look at how well the IPO market has done because they're able. Look, you can meet, 8 to 10 investors a day and actually bring in an investor pool that might not have access because of the limitations with physical travel. Look at how more diverse the investor pool is.
Yeah,
I don't think that's going to go away.
No, it's not going to go away. And I think you hit upon something where they're beginning to realize it's much more efficient to do it that way. Now, just getting back to the Russell 2000 for a second, I believe that just what you say, M&A has started to ramp up as people realize that, there's a lot of capital, there's a lot of cash on the sidelines. I think 2021 is going to be the year of the M&A, and it's going to be a lot of those small mid-cap names. We saw one this week, have an offer made for it. There's a lot of money floating around, but you're exactly right that efficiency level in that particular area has been good. But I think the M&A space is going to really wake up because investors are really going to look at, say, wait a minute, if rates are going to stay this low for this long, we can make some money out there.
All right, my friend, next time we speak, it'll be certainly a different world. That's for sure. Following November 3rd. Thanks for joining us as always on Trade Talks.
Thanks for having me.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.